Hello everyone and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Thursday 13th of June. There's a slight air of risk aversion through markets today. We've had comments from Donald Trump in recent days really, just gradually winding up this whole move to safe haven plays that has been developing, and he's been talking about trade tariffs not only against China and Mexico but also now talking about sanctions against Germany. He's upset about the whole situation surrounding the Nord Stream 2 gas pipeline from Russia to Germany, and he's talking about sanctions because of that and German reliance on Russia. Subsequently, markets have taken a little bit of a risk-off move, and we've seen equity markets just starting to roll back a bit. You've seen the safe haven plays such as the yen starting to pull a little bit stronger. You've seen gold, which rebounded yesterday, holding above 1330 today. That's a level to watch. I'll talk about the implications on the charts in a bit, but 1330 is an important level near term on gold. We've seen the Swiss franc also performing much better. And interestingly, the Aussie and the Kiwi remain under a little bit of pressure as well. The US dollar actually saw a bit of a turnaround on the charts on a key one-day reversal actually yesterday, interestingly enough, into the close, despite the fact that inflation just started to slip back a bit. What we saw is Treasury yields also starting to fall back again, on the 10-year and the 2-year. So this general mood of risk aversion is in the markets. And despite the fact that we've seen S&P futures, which when I was writing the morning report were down around about 0.2%, they rebounded to 0.2% higher, whether that's to do with the oil price rebounding strongly, talks or suggestions that, well, I say suggestions, reports of fires on a couple of oil tankers in the Gulf in the Sea of Oman that sort of point towards possible supply disruptions, led to a rebound on oil. Maybe that's helped to pull stock markets higher, but whether that's a sustainable rebound, I'm not entirely convinced, certainly considering the fact that we've seen just rolling over on S&P 500 and a little bit of a risk aversion coming back into the markets. So that's where we're at coming into today. Now we've got data points to look out for. We've got Eurozone industrial production at 10 o'clock. It's a minor bit of data there, but certainly 0.4% negative on the month after 0.3% negative last month. It's not a great signal. Weekly jobless claims for the States, 215,000 is the expectation there. Now, my chart of the day is the sterling Aussie. Now, I've been talking about the Aussie in recent days, which the Aussie has been coming under pressure on this risk aversion that's coming back into the market, and sterling has been holding ground. Now, that equals a rebound on sterling Aussie. Now, look at the similar chart setup that we had back in March into April. The sell-off for 5 or 6 weeks there, similar to the sell-off that we saw in May, starting to rebound from the same level of support around 81 big figure, pulling higher, breaking that downtrend. We've seen a bull cross on the MACD line, similar to what we saw in April. We've seen a bull cross on the stochastics, accelerating higher, similar to what we saw in April. RSI are back above 50. It really does suggest that we're going to be testing the initial band of resistance, which is a pivot area between 84 and 84.60, that held initially back in April, but then once closing through that, it really did accelerate away. So that is your initial line of resistance, 84 to 84.60. But it is important to suggest that this is a very similar move to what we saw back in April. So you're looking at the hourly chart where you're driving higher lows and higher highs. You've got consistent configuration positive, above 40 on the RSI, above neutral on the MACD lines. Weakness is being seen as a chance to buy. That reaction low at 82.70. Actually, if you zoom out here, you could argue that that is a base pattern. A base pattern area. You could argue a head and shoulders reversal. So let me just go out a little bit further. You can see that little head and shoulders reversal arguably through that 84.70 mark. Tested as a basis of support again, holding, so that is, you could argue again, around about 150 pips of recovery back above 84 figure as your target area. So that brings you back into this resistance band, so that is likely to be a target area on a near-term basis, but a close through 84.60 really does open the upside again. So I wish you good luck in your trading today, and I will speak to you later.